Hello guys, so in this lecture I will give you a brief introduction of the charts. Guys, you must be thinking, why do we need charts and what are charts? So guys, to give you a definition, chart is basically a medium or a tool to reflect the price information of an asset. Asset can be equity, it can be commodity, it can be currency or any other asset, even cryptocurrency as well. So guys, what basically a chart is doing, it is helping us in visualizing the price data. This price data we can get in Excel as well. We can get the complete data. Suppose if you are an intraday trader, you can get the 1 minute data in Excel as well. But do you think it is possible for a human brain to process all the information in the Excel, or say process all the information in the data form? No. It would be much easier if the data can be represented in the graphical or any other type of form, which is much easier to visualize by the human brain. So that is why guys, we need chart, and as a trader we rely so much on the chart, and all our trade depends upon the prices which are reflected by different types of chart. So what chart is doing? Chart is displaying the price information of the particular asset over a period of the time. Time period can change. Suppose I am an intraday trader, I need the time minute wise. I can get the minute wise data. I can select the minute time frame. And suppose I am a long-term investor, and my investing period is between 6 months to 12 months. So I might need the information day-wise. So what I can do, I can anytime switch the settings, and I can switch it to the daily charts, and even the monthly charts and the yearly charts. So if I select the minute chart, 1 minute chart, I'll get the data minute-wise. So for an intraday trader, a minute chart can be relevant. For a long investor whose holding period is 6 to 12 months, a daily chart is relevant. So what he'll do, he'll change the setting and he will switch to 1 day time frame. So I'll get the data 1 day wise, right guys? So, and now what are the important types of charts? So guys, there are different forms of charts. There are n number of forms of chart, but the three most important forms which are used by most of the trader is the bar chart, is the line chart, and the candlestick chart. So among this, the candlestick charts are most popular because there is a reason behind it, which I will explain you in this video later on. So the most popular chart is the candlestick chart, which is used by most of the trader. Even I personally use candlestick charts for my intraday trading or my position trading as well. So guys, next slide. I'll switch to the next slide. What are line chart and how it is helpful, and what are the advantages? That is, what are the advantages of the line chart and what are the disadvantages of the line chart? So in line chart, what line chart does? Suppose I told you earlier that we can select the time frame. Suppose I have selected 1 minute time frame. What a line chart will do? It will put the dots. Say it will put the dots on the close of a particular time frame. So say I'll explain you clearly. Suppose I have selected 1 minute time frame and the close of that particular 1 minute is say at 100 rupees, right? And the next candle and the next minute the close is at 101. So it will put the dots on the close of that particular time frame which you have selected, and it will connect all the dots. So and ultimately it will form a line. It will take a form of a line, and that will help me in visualizing the price. We are not getting the data bar wise, or rather we are getting a line which is connected via close of the time frame which we have selected. So it is the advantage is that it is very much easier to analyze the trend, like it is an uptrend or downtrend using the line chart, and it also helps in identifying the support and resistance better. We can draw a trend line using the line chart. I draw a trend line using the line chart only, but for other purpose I use candlestick chart. For drawing the trend lines, I select the line chart. So in this way the line chart is useful, but there's one disadvantage as well. Suppose like I need more information. This line chart is just providing me the close of the time frame which I have selected, and it is connecting them and it is forming a line. And suppose I need more information, like I want the open of the particular time frame which I have selected, I want the close, I want the high, I want the low. So that all information I won't be getting. I will just be getting the close of the time frame which I have selected, and it will be connected. The dot will be connected via line. So hence in this way the line chart are not that much useful. The other form of charts like bar charts and candlestick charts, they provide this extra information which is required by the most of the trader. So in this way the line chart is disadvantageous. And now I'll switch to the next slide. This is the bar charts. So what are bar charts? These are the traditional types of chart. Like basically it is a candlestick chart only, which I will explain you later in much more detail. But these are the traditional charts. It was used by the traders earlier. So it gives us the same information which candlestick charts provide. It provides us the open, high, close, high and close of the time frame which we have selected. Suppose we have selected a minute time frame, so it will provide me the per minute data, like in the form of the chart. Like you can see on the screen, there are several bars: first, second, third, 4, 5, 6. There's several bars on the screen. So this first bar is providing me all the information. It is providing me the open. The O part will be the open. See, we can see it here. So this all information will provide. This is the open, and this is the high, this is the close, and this is the low of 1 minute if I have selected 1 minute time frame. And if I have selected say day time frame, it will provide me information with respect to that particular day, right? So one chart will be providing, suppose today is 25th September, so I'll getting the low, open, close, high of 25th September if I have selected daily time frame. And there will be another bar next day, that is 26th September, and I will be getting all the information for the 26th September. So guys, it is providing much information, and it is much helpful as compared to the line chart when the traders are doing trading, and they need this information to decide their trade, right? So I'll read the text for you just to confirm whether I have covered all the points or not. A bar price chart shows a standard price bar for the time frame being observed. If you are looking at a one-day chart, you will see a standard price bar for each day time frame. As I explained you, this suppose if we have selected one day time frame, we will get the information for each day. And suppose this is the day chart. So this bar may be representing 25th September, and this bar will be representing the next day information, that is 26, and so on, right? And the same goes for 1 minute. If I select the 1 minute time frame, so these bars will be of 1 minute. It will provide me the information of each minute. Next line. Each individual price bar gives us the 4 pieces of information that we can use to help us make our trade decision: the open, high, and close. I have already covered this. Sometimes the bar charts are also called OHLC charts. So sometimes people also call it OHLC chart because it is providing the information that is open, high, low, and close. So guys, now let's discuss the candlestick charts and why it is preferred by most of the traders. Guys, this candlestick charts is the new form of as I told you, the bars chart was the traditional form of candlesticks, and the latest version of the bar chart is the candlestick charts in the layman term, if we understand by the layman term. So guys, what this chart is doing, this is providing you a little bit extra information. No, information is same, but it is helping you in better visualization. I'll explain you how. Suppose so listen, I'll go back and see. This is the high, this is the close, this is the open, and this is the low. The same information we are getting it here: high, open, close, and low. So guys, you must be asking what is the difference? Why you are preferring candlestick chart more? Because we are getting the same information. Why you prefer it more? Why it is used by most of the traders? Guys, see, if we want this information, like what was the open, what was the close, we have to look closely at the chart, closely at the bar chart, because we by just looking at this simply, we can't identify the that open was higher or open was lower as compared to the close. But see, when I am looking at the candle chart, the open I can clearly visualize, because this is the red candle. What does the red candle implies? It implies that open was higher than the close. So I can easily visualize that the suppose it is a daily chart, on that particular day the open was higher and the close was lower, so that's why it is forming a red body. This part is known as body. I'll clear you later, but let's discuss this first. So open was higher and the close is lower, hence it is a red candle. So they ended in that particular day ended in red. And look at this green candle, the open was lower and the close was higher, so that day it is forming a green candle, and this part is the body. I'll explain you. And now you must be thinking why this here it is a black candle and here it is a white candle. Guys, most of the brokers or most of the charting platform, they will show you red or green candle, but you can switch it to the white or black candle. It's the same thing. For red they use black for the bearish candle, and for the bullish candle they use white color as well. Right guys, so I read the text for you. Each candlestick shows the high, open and close for the period of time it reflects. This is the same information reflected in the traditional price bars, but candlestick make this information much easier to visualize. As I said, it is giving the same information, but it is representing in a better way, which makes the life of a trader easier. So it's easier for him to visualize the data. Right guys, so next point, candlestick charts indicate the high and low of the given time period, just as the bar chart do, with a vertical line. This is the vertical line I'm telling you about. This is the vertical line. See, this is the vertical line. The top vertical line is called the upper shadow, while the bottom vertical line is called the lower shadow. You might also see the upper and the lower shadow referred to as wick or tail. So guys, I'll explain you the parts. I'll explain you what are the different part of the candlestick called. So see on the screen. So guys, this part, the black here, the red here, the white here, the green here, this is the body of the candle. So what it is representing? It is representing the open and the close of that particular time frame which we have selected. Suppose we have selected a daily time frame, so it is giving information of that particular day with respect to open or close. Suppose the market opened here and the market closed here, so it is forming a red body, which is also known as the bearish candle. And here the market opened here and it closed here. So this is the body, and we also call it since it is opening since it is closing in green, we can also call it a bullish body, bullish candlesticks. Right guys, so the gap between the open and close is referred to as the body of the candlestick. So we call it the body of the candlestick. And you must be seeing a vertical line on the above part and on the below part as well. So what it is representing? Basically, it is the high. It is representing the high and the low of the particular day. So I will explain you better. Suppose the market opened. The market opened, as we know, the market opens at 9:15. The market opened at 9:15 at rupees, say 100 rupees. A particular asset opened at 100 rupees, and it went low till 85. It made a low on that particular day of 85 rupees. But and then during the day itself, it made a high of 105 rupees, right? But still the open is 100, high is 105, low is 85, but the close is 90, right? So this body is representing the gap between the open and close, and the two vertical lines on the upside and the downside. It is giving us more information. It is telling us the high and the low during the day, if we have selected daily time frame, right? So this is the information, and this is sometimes referred to as tails or wicks. And guys, believe me, this is very important. It will help you a lot later if you go deep into the study of the candlestick. These tails plays a very crucial role. I'll give you one example. Say the open, this is the normal candlestick which you will see in the market, but sometimes you will see a different candlestick as well. In that candidate, it might happen the open is 100, open is 100, and the close is say 90, and the close is say 90. Here the close, open and close is same, but the low can be 70. So there will be a long tail on the downside. So by that the trader can easily make out that during the day there was so much selling pressure, the price went up to 70 or say 75, then it recovered, then the buyers came, and finally it closed at 90. So this tail is providing a great information to the trader, depending upon which he can decide his trade. So we can say that there was a selling pressure during the day, but buyers came in and they bought that particular asset a lot, and at the close was near the opening price only, right guys? So these tails are very important, and I'll again repeat all the components of a candlestick. So this is the tail, and this is the body. Same. So guys, I have told you earlier also, I'll repeat it. This is the traditional candlestick in which we used to represent the down move or say the bearish move by black candle as well. And in the traditional times, the bullish move we used to represent by the white candle. So guys, I think I have covered all this. Now let's move to the next slide. So guys, I'll read it. I think I have covered this, but still, just to make sure, I'll read it again. The main difference between the bar chart and the candlestick chart lies in how the candle chart displays the opening and the closing price. The large block in the middle of the candlestick indicates the range between the opening and the closing price. Traditionally, block is known as the real body. As I explained you guys, the gap between the opening and the closing is the real body. The real body can be green or red depending upon the close and the open. Suppose if the open is less and the close is higher, it is a green candle, which which can also be called as the bullish candle. And suppose the open is higher and the close is lower, it is the red body, or we can say it the bearish candlestick, right guys? So if the real body is red, it means the close was lower than the open, or called as the bearish candle. If the real body is green, it means the close was higher than the open, or called as the bullish candle. So guys, I have covered all this. So guys, now you must be having let's see if we have another. No. So guys, now you must have a rough idea of what are the charts, why do we need it, and different important types of the chart, and why candlesticks is the it's mostly preferred by most of the traders. So I think I have cleared all this, guys. So in my next lectures, or in my next classes, you can say, or in the next courses, you can get the idea, the detailed study of the candlesticks. So there are several candlestick patterns, even like if you want to become a price action trader, or you are a price action trader, then you use candlesticks a lot. All the information is provided by the candlestick. There are several patterns, say bullish, there are several bullish patterns, there are several bullish bearish pattern, morning star, evening star. There are several patterns, there are n number of patterns. There are tailed bars, they are different, there are fakey bars, there are n number of the candlestick patterns, and the types of the candlestick design which can be formed. And accordingly, once you will learn that, you can develop a price action trading strategy. So guys, this was the brief about the charts, and now in the next lecture, in the next class, I'll discuss deeply about the different candlestick patterns and everything else. So guys, thank you so much. I'll see you in the next lecture.